Guys, while we condemn the inactivity of this government, it is fair enough we applaud them where they get it right. President Bola Ahmed Tinubu had just signed a new set of tax laws that could redefine how tax is paid by businesses. This video explains in bits how these laws apply and favor you as a business person. Don't forget to like this video. You can leave your thoughts in the comment section and subscribe to this YouTube channel. Let's go.
So we've heard that report and the summary of that, but realistically, what has changed from the previous taxes and these four new taxes, as it were? Can you just break it down for us?
Thank you so much. So I think it was very well summarized. So essentially, we now have simplified rules. So think about a situation where to understand Nigeria's tax regime, you need to go through different booklets, different pieces of legislation. All of this has been harmonized into four main, pieces of legislation, if you will. So when you think about what has changed, specifically, you think about exemptions given to small businesses. This has been increased, right? So currently, a small company is one that earns 25 million naira. This threshold has been increased to 50 million. And even some versions of the bill, depending on when we see the signed one, say even up to 100 potentially. So what does that imply? It means that as a small company, within that revenue threshold, you're tax exempt. And because it says company, it encourages people to formalize. So knowing that if you're a business, like we call it business name or individuals, you technically don't get that exemption. So it forces you to want to formalize, and that way, it increases financial inclusion, and there's more visibility around your activities, for you to get the exemption. And then obviously, hopefully when you grow bigger, you're then, able to pay taxes, So that's one key change. Another key change is that, and this might be a technical point, right? It introduces zero rating on certain type of items for VAT. Zero rating for VAT means that if you partake in the sale of things like medical equipment, educational materials, and the rest, you can sell those things cheaper because your VAT costs can be refunded to you, basically. So that's also something that's key. Previously, we didn't have those things zero rated, so those things needed to be sold a bit more expensive. So that's another key point. I think another key point to mention is that for other taxes in the sense of individuals, right? You now are exempt if you earn 800,000 naira per annum, right? So it was done deliberately to sort of match our minimum wage, which is around 75,000. So if you multiply that by 12, it gives you around 800 thereabout. And that exemption threshold can increase to 1 million naira if you get the additional 200,000 for rent relief, right? So those key things show that there's a deliberate focus on giving relief to low-income earners, and I'll say the vulnerable generally in our society.
All of this look good, very good on paper. And as we know with laws in Nigeria, when it comes to implementation, that is where the challenge comes in. And I'd like to know if you foresee any bottlenecks when it comes to implementation. Implementation is supposed to start in 2026.
Absolutely.
And President Tinubu encountered some kickbacks or, some resistance when it comes to the northern stakeholders, but he had to give some concessions to them. But I'd like to know if you foresee any bottlenecks when it comes to implementation of these tax laws.
Very good question. And one of the things I would say will be something that will help implementation is, the use of technology, which is also something that we've seen in the Act, right? So there's now a focus on fiscalization, which means that businesses will now be required to deploy technology so that the tax authorities can real time, see transactions, right? So that helps with implementation because there's now that availability of information. And I would say, kudos to the FIRS, which is now the Nigeria Revenue Service, NRS, right? Because they've been doing quite some, capacity building in recent times, also to meet up with, some of the new requirements and compliance obligations in the Act now. I wanted to say bills, right? So even though, yes, the work starts now, thankfully, there's this transition period that has been given, which will enable all the stakeholders to adequately prepare. Because even though we're looking at the regulatory authorities, taxpayers themselves need to put their affairs in order to ensure that come 1st of January 2026, both parties are aligned with regards to new obligations.
So the only bottleneck you foresee is technology?
Yeah, well, largely, and then, like I said, just the general awareness, of the new requirements. And like I said, there's also been capacity building. So I do not think that some of the earlier, resistance that we saw will be sustained, because there was, further to some of those resistance, there was further engagement, and the stakeholders finally came together. In fact, during the stakeholder hearings in Abuja, which was open to the public, a lot of people came to make presentations. I was there personally, and those presentations, have been reflected to a large extent in the bills that we've seen. So I think largely a lot of people's, objectives and, insights have been, sort of catered to. So I don't think from that sectional resistance standpoint that we'll see a lot of that. That was something, that was raising its heads at the earlier time. So I think largely it's really around the commitment from government to do this, which, everything is really around the tone from the top. It appears that the tone from the top nowadays is positive. We hope that that translates to the states, because at the state level, the leadership of each state also have that responsibility to ensure that the tax authorities in their states are able to adequately implement the new rules.
Which brings me down to the question of harmonization of tax collection by the federal and state governments. Of course, we're saying this is a plus, as it were, but the stigma of this issue of multiple taxation, do you think that will reduce, in essence, with this act, as it were?
Yes, I can give you an example. So for companies, currently, in fact, if you're operating some sectors, apart from your regular company's income tax, you're supposed to pay a tertiary education tax to fund Nigeria universities. You're supposed to pay, for banks, for example, they'll pay something called IT tax because they use a lot of technology. There's another almost duplicated tax. It's called the NASENI levy. And then I think there was some points I heard they were trying to introduce the NYSC levy. Just when, new, should I say, requirements for funding, they just, try to introduce a different levy or tax. But this bill has harmonized all of that into something called the development levy. That singular act alone eases compliance for businesses, because you don't have to deal with all those different taxes, which apart from the actual tax expense, the cost to even administer them, file those different things can be a burden. So this has, sort of harmonized that, and to a large extent it's going to go a long way in easing that burden for taxpayers.
So one part I find very interesting is President Tinubu's statement that these reforms will boost investor confidence. And we know that when it comes to growing the economy, investor confidence is very germane. And then I'm looking at what mechanisms in these laws you think will achieve that.
Yeah, very key question, I must say. So yes, we think it will boost investor confidence just from even the first point of certainty, right? So investors don't like, where there's no visibility around your tax landscape. If you think about the recently passed Petroleum Industry Act, which almost took 20 years before it came into life, compared to this where there was certainty in terms of, and now investors can predict, because that's what investors want to be able to do, to predict, to model out their affairs. So this, just from the standpoint of it being, it's providing certainty, already helps investors. And then when you think about some of the extra pluses in the bill, for example, in the act rather, I should say, for example, investors can now employ Nigerians, right? Or foreign companies can employ Nigerians, and they don't get exposed to the company's income tax exposures that you would do if you were in other countries. And that's something that was deliberately included in the act to almost help with the whole Japa syndrome, where so now you can be in Nigeria, work for a foreign company, and you're not exposing that foreign company to tax in Nigeria. So that's also something along those lines that can encourage foreign investments.
All right, currently, if I may use the word hyper or galloping inflation, as it were, that's where we're in right now. So how does this impact the actual implementation of this act, as it were? We've still got like 6 months to go before next year. So looking at it, if we continue on this trajectory of not perhaps curbing inflation as we should, then where are we with this?
Yes, absolutely. So inflation continues to remain a big problem. And experts have said that our inflation is basically a cost-driven inflation. And who are the hardest hit by inflation is usually the low-income earners, right? And that's why this act has focused on, giving some sort of reprieve to these low-income earners, so that when you pay for things like rent, there's no issue on whether there's VAT or not. It's clearly not vatable, right? Unlike before, where there was some uncertainty. When you pay for those basic necessities, right? The VAT zero-rated system, like I spoke about earlier, helps those items to continue to remain cheap. So yes, so to that extent, this sort of helps because it supports, the vulnerable in the society who are the hardest hit by inflation.
This is one of the, ways to action some of the things the president had said even before he came into office, saying that we just need to spread the tax net instead of taxing people more.